Yeah. Good day, guys. It's your boy JJ Money. So I would like to apologize for a while. I've not uploaded, so I've been busy trading Forex and working some of my plan out. So I'm gonna be sharing more of Forex later on catching some sniper entries and the rest. So today's video is just about bucket option, and it's about an update on the zigzag strategy. The zigzag strategy has been working. All right, before I go further, if it's the first time watching the video, please subscribe. And if you've been watching the video, make sure you subscribe and join the channel, the Telegram channel, where we post all our signals and updates. And also, if you don't have any Pocket Option account, you can quickly sign up on the link, below, so that you can assist us in the group on this channel. All right, so quickly, I want to share an update with this zigzag strategy. And yeah, I've received a lot of both good and bad testimony on the zigzag strategy. Most of the bad are people who were not able to manage their risk management. So I have an update for you, and I don't think I've shared this. I've been using this, privately, and it's time for me to share this. So now there are a few things that you're gonna notice. All right, so and the few things is simple. uh, let's assume let's assume, so the only few things we're adding now, so I'm going to remove the stochastic. I don't need it. So we're adding the moving average indicator, 50 EMA style. You can put this, you can just increase the red style to 2 so you can see it very well. All right, so the next thing is, now this is the strategy I'll be using to for the signal on the channel. Make sure you join the channel, load your account, and I'm going to be showing signals, about 9 signals a day, 9 to 10 or 15 signals a day, and there are specific times. You can join the times, you can join the channel and see all of those details. All right, so this is the strategy I'll be using to share signals, and I use 15 minutes. I use 5 minute time frame so that some of you can get involved of the signals. So I make sure I use 5 minute charts, and the expiring time is usually 15 minutes. So I so it's usually 15 minutes. All right. Then the risk percentage, depending on your capital, it could be 1%. It could be, um, depending on your capital. If you have $100, you can start with 2%. If you have $1,000, you can start with 2% also. 2%, 1 to 5% is cool, but 2% is not bad. You need to lose about 200 to went more than 50 times, to blow the account, which in a row, all right, which is not possible. All right, so how does this strategy work? There's one more thing we have to do. We are still going to change the candle to hair Kashin. All right. So this makes the work clean. So we use Haikenshin. Haikenshin. Alright, so I'm gonna pronounce it Haikenshin. It's Haikeshina. Some people call it Haikeshina. So I just say Haikenshin candles. And the reason why we're using this is because it's very clean. So I watched some videos on some details about Haikenshin candles, and some weeks, but I'm not going to go detailed on all of that. So I'm just going to show you some. So it works similar with how we use um, the zigzag, but this time around we want to see. So let me look for a clean chart. So this time I want to see price break a structure. So there's no break of structure. So there was a break of structure, and the moving average is below the price. Once that activates, we don't just take trade. We want to see a pullback. All right, so the pullback is just two negative color of the trend. So if we're looking for buy trades, all right, so let me just some of you might think I'm too fast, so let me this. Let me use this horizontal too and change the color to about let's use blue. Let's make the blue thicker. All right, so what I was trying to say is how do you take this? How do you use the strategies? For example, you remember if you not watch the version 1 to 3, so this is version 4. All right, so if you not watch version 1 to 3, make sure you do. There's a lot of details of how the zigzag works. But now with this, you just have to, how you do it is this. This is the high, this was the low. All right. So so this was the first high and this was the low, right? So price broke into this low, and you want to take a trade, a sell trade. So for example, maybe you would not, maybe definitely you might have a, let's see, it's 1 2 3. So let's say you took a sell here. This was where the candle closed. So this might be like a break even trade. So why did you take a sell? You took a sell because price break this structure below with this body, and the moving average is above it. So you look for sell at the first pullback candle, which is this two green, and you take a sell at the close of it. Once the candle closes, you took a sell, three candles, so your expiring is about three candles at 15 minutes, 1 2 3. So this was where you would have had the break even trade or maybe a profit trade. So now this would be your next high. So price did not break above it with body, and this was your next low. So price did not break this low with the body, just wick it. We call it, on Forex we call this liquidity, taking off liquidity rejection. All right, so now what happened was that so price break the high, it's somewhere around there. So now we look for pullback. So now when we see these two red candles, and the zigzags changes to you know downtrend, we're not going to take a trade. So we only take a buy trade if the zigzag is still upward. So most of the times, once you see this area, you might have what we call pullback. So for example, maybe this what hasn't really changed, and you saw this trade. This would be where you would have taken a buy trade. Of course, this would be a stop loss, no issues. All right, because why do you take the buy? Price broke with the body here, and you're looking for two red candles, and and the two red candles happened somewhere around there, and you took a buy trade because the moving average is below. So let's quickly check. A new trade, yeah. So let's see. So there was no break below. Let's see. So this looks like a break below. This would be another losing trade, no issues. So price went high and went, higher. So this was the low and this was the high. So now, because of, if this was the low, this would be a losing trade, no issues. You take a sell, maybe from this area. I'm very sure this zigzag would have changed, so most likely you might not take a trade there. So this would have been a trade. Price breaks this high with body closure, moving average is below, and what happened was that we want to see um, two red candles first, and making sure that the trend is still bullish. All right, so for example, you would have not taken this trade. I just remember you would have not taken this trade if the body is above the moving average. Everything needs to be below for a sell. So since this pullback did not go below the moving average, and the trend is still bullish, so from here you take a buy, three candles, 1 2 3. So this will be a bullish trade. So you look for another trade on, since price is still bullish, two red candles, and you take a, so these are the two red candles for a signal. At the close of the second red candles, make sure it's a cashing. Then you take a bullish trade for three candles bullish. So price went 1 2 3. So this would have been a good trade. Another trade was here, and price closed at you took a buy at the close of the second red candles. Now I'll show you the reason why we're using high cashing. So let's just put it like that. It's because of if it's normal candle, there will be a lot of noises here, so it's eliminate a lot of fake trades. All right, so this would have been like maybe one, two, three, four, like four winning trades in a row on this trade, and this would have been, yeah, this would have been a fourth trade that you won, one, two, three, and this would have been another trade, one, two, three. So now the issue is that most likely this would still be bullish, most likely because this was, this most likely will still be bullish. All right, so this would have been a losing trade. That's not an issue. So at this point, you don't take any trade, even when you see all this stuff, you don't take any trade. So because a high and low has been formed, so you want to wait for this high to be broken, and it was broken here, and yeah, there was no any trade here. So all of this was just bearish. So maybe you took a sell here and you took a buy, it was a losing trade, or maybe before you took it, the price changed, the zigzag changes. So now price has gone below it, and you wait for one of the highs to be broken. All right, so that's what it means. So I want to quickly show you if it's candlesticks, um, so you'd have had a trade here, and one, two, three, yeah, winning trade, another trade, one, two, three, winning trade. Just that on with candlestick, it's kind of too rough. So it's best to, like, for example, somewhere around there, you'd have taken multiple losses in trades that are not on trends that are not clear. So that's why it's best to use this particular type of candle. So make sure this is the way I take my setup, and so whenever you see the signal, you follow through. All right, thank you so much. So let me just see if I can take any trades. Price is closing below here, so no close here. So let's see. Okay, let's see. Um, so we're bearish, and this would have been your first entry. Sell one to three, most likely maybe a winning trade because it closes somewhere around there, and you take another sell also here, so you win the two trades. So that is just how it works. All right, so sorry about that. So if you have any question, make sure you join the channel on the description below, and ask your questions, and like this video, gives it thumbs up, and yeah, thank you so much, and see you in the channel for the signals. God bless you all.